And recording has begun. Hey folks, Chris with Life and Real Estate, back to you with another video. And today we're going to go over the home buying process. And I do get asked this question quite frequently, and I think this will kind of help get you into a better understanding of what you need to do when you're looking to start buying a home, so that you're mentally prepared and you know what's expected of you, and you can check all these things off your list, right? So first we want to determine how much home you can afford. And that's a tough one for a lot of folks because they always want bigger houses than they can afford, but if you can't make that mortgage payment, what are you going to do? So to determine how much home you can afford, you can there's all kinds of calculators out there to figure out what your debt to income ratio is. You want to figure that out so that you kind of know what your free cash flow is every month, so that you know how much house you can afford. Roughly speaking, if your debts are all in pretty good order and you don't have a lot of outstanding debt like credit cards and things of that nature, generally you can take 2 to 3 times your yearly income, and that's if married, then you do both. If you're single, then you just do your income, obviously. You can include other incomes in that, you just double that, and that's like the minimum you should be able to afford fairly easy. With the rates right now, you're looking at closer to more like 3.5, 4 times your salary that you can afford, because the payments on those mortgages are so much lower because of the lower rates. And it's like I said in a previous video, those are starting to go up, so it's something that you want to seriously consider doing and get begin the process if that's what you want to do, is buy a home before those rates jump up too high and make it harder, because it will affect underwriting and all that stuff, and we'll get into that. So that's step number one, figure out how much home you can afford, so you have a general idea what you should be looking at before you even go out and start thinking about agents, looking at homes and all that stuff, because you don't want to go look at a $1 million home, find out you can't afford the mortgage payments on it, right? That would just be disappointing and make everybody sad. So let's just avoid that. Do a little bit of homework for yourself. Makes life a little easier. Number 2 is save for a down payment. I know this is a big one. Some people have saved for years. They're just waiting. You're going to want to look at, depending on what kind of loan you're going to get, for an FHA, you're looking at 3.5%. Easy. For a standard conventional loan, sometimes you can get away with 5, 10, 15, or 20%. Just kind of depends on the lender. If you don't have a lender, there are plenty of services out there that can help you get with a lender, or if you do have an agent that you trust, you can get with them and they can help you find some lenders they know are good, and you can work it out that way. And then the lender is going to be able to go through some of these other things that we're going to mention here that'll help, but it's just kind of things that you need to know so that you can get that stuff moving, right? So that brings us to point number 3. You obviously want to find an agent you can trust. You don't want to get somebody that you don't know that well, or you have never heard of, or they might be good, you don't know, but if you have somebody that can recommend somebody, that's always a plus. Most of my clients I've had from referrals, that somebody who's worked with me, they know I can do good, they know I do well, and that I'll help out their friend or family member, whatever the case may be. So you want to find somebody that you can trust, to be your agent and help you and be able to get you through all this stuff without just treating you like another person. And that's kind of something else that comes into play there too, is that be careful with friends. If you have an agent that's a friend, you kind of have to ask yourself, you know how they are they really going to represent your best interest? So you got to consider little things here and there. It's great to have friends in the industry, I won't lie. It's a great thing to have. Before I got my license, we used a family friend to get our first home, and what have you. So it was a pretty good experience, and they treated us like any other client. There real special treatment there. Explain things to us, all that. So it helped that I already had some pre-knowledge going in, so I knew what to look for, what to expect. So that would be my little take on that. Don't be afraid to pick somebody that people are recommending, even if you don't know them. There's always that option too. Chances are people are recommending them, they're probably good at what they do, right? Otherwise people wouldn't recommend. They just say avoid this person at all costs. Well, we don't want to hear that in the industry, but it does happen. So we'll just move on to the next point here, and that's to get a pre-approval. So now you've determined how much home you can afford, you've been saving for your down payment, and you have an agent, and they connect you with a lender. So now you want to start that pre-approval process, and the lender's going to walk you through all of that. There's going to be a whole bunch of paperwork they're going to have you provide to them, paycheck stubs, proof of income, all that fun stuff, work history, so the underwriters can go in and they can look and see when they start doing the loan processing to see that you're going to be able to afford this home, but they can get to the pre-approval done before it goes to the underwriting, right? So that'll kind of tell you how much home you can afford, and then actually show you that, okay, you maybe factor that you could do, let's say, in your own calculations, you came at like 240, right? And then the pre-approval says you can get up to 310. So now you have a nice range. You know that you're comfortable at 240, but you can go up to 310 on the loan and still get a pretty good, decently reduced mortgage payment because of the interest rates. So that gives you a nice range to play with, and that way when you're going shopping for homes that you're not going to go look at something outside of your budget. It's nice to see bigger homes. I won't lie, it's fun to go into them. I mean, that's one of the benefits of my job is I get to walk into all kinds of homes and see everything from, the $100,000 things all the way up to the $1 million houses. So, it's a fun time, and I get to experience all of that. So, I won't lie, it's fun to do, but, you don't want to walk into a home that's way over your budget and then be disappointed because you can't get financing for it. So it's stay within your range, and it'll work out better for you. That way there's no disappointments, and you're targeting things that you'll be able to afford. Because the last thing we want to hear about is a foreclosure, right? That's not fun for anybody. So that comes into the next point, which is find a home that fits. So you want to make sure your needs are your needs are met. So if you need 2 bedrooms, you want to make sure that it has 2 bedrooms. If you want it to have a certain amount of land, well, then make sure it has the land. You want to find things that meet your criteria, and your agent will go through that with you. Their square footage, amount of rooms, bathrooms, showers, all that stuff can factor into your decision making. So you kind of have to really think about what do you want in a home, whether it's going to be a starter home or it's going to be a home you plan on living in for 15-20 years. I'm glad and sad to say that most homes folks are only living in for about 5 years these days because of job changes and situation changes. So it's not like it used to be where you buy a home and that's just where you live for 20 years. It doesn't seem to happen as often as it used to. But you never know. You could find a home that you plan to live in the rest of your days until the unfortunate maker comes and takes you to a more better place than this crazy world. So once you find a home that fits, you've talked with your agent, you decide that you want to make an offer, and you want to do it in a way that we would call as a smart offer, right? You don't want to give an offer that has no chance of being accepted whatsoever, because what purpose does that serve other than give you disappointment? We don't want to have disappointments. We want to have wins and victories, right? And if it's a house you really, 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 really like, well, then you want to make sure that your offer is going to be like cream of the crop on the top, that there's no way they can say no to you, right? And a good agent will be able to do that for you as long as you're not given too many restrictions. I mean, there's some things that even I wouldn't budge on, so I get that, right? So you want to have that comes to the next things, you're going to put home inspections in there, because most banks won't even give you a loan unless you have a home inspection done. That's just kind of a you have to have it thing. There's other contingencies you can put in place, like appraisal contingencies, so that if the house comes back it's nowhere near the value of the home, that you have a way to break the agreement. Or you can choose to waive the appraisal contingency altogether and pay the amount that's difference, because the bank's only going to give you a loan for what it appraises at, period. They don't wiggle on that. That's just how it is, because that's all the money that they think they will be able to get for it if you foreclose on the home and they have to sell it. They want to be able to make sure that your loan is covered and not have a bunch of leftover. So you have the option. I mean, I do custom appraisal clauses all the time for my clients, that they're willing to pay, say, up to $5,000 over appraised value, so that way that it kind of gives the seller incentives, like, okay, if it comes a little under, I'm still making a little extra, right? It makes them feel good about it, and they're less likely to cause you issues. So you're going to get your home inspection, all the contingencies settled, and once everything's all squared away there, then we're looking at moving on towards the preparing for close and then moving to close. Preparing for close, your lender's going to get a hold of you for some final documentation. It's going to go to underwriting, do their thing to make sure that your debt to income looks good, and all that is all in order. And then if everything comes back clear there, then you're ready to go to the closing table, sign some papers, get the keys, and congratulations, the house is yours. Over my time period of doing real estate now and being through it personally, there's a few things that I can say of little extra tips. I'll give these bonus tips for you. One, don't be taking out a lot of credit cards or putting a lot of credit card debt. Don't take out any loans like vehicles and things of that nature. Anything that can affect your credit during that time period where you're searching for a home. I mean, you want to have a pretty consistent, no new things for about 6 months. That's about the point where, things are okay and they're settled in. I've had a couple folks who have done silly things like, okay, well, we're going to go out and get this that costs, $60,000 to put on a loan, and now we want to buy a house. Well, the underwriters and things go like, and say, no, thank you. You're too big of a risk. Have a nice day. And that could really hurt you in the end if you do things like that. So you want to keep, your credit card stuff on, on par. You don't want to open up any new accounts. If you're really looking at trying to get a house in the next 6 months or so, 6 months of waiting to open up a new credit card or a new line of, whatever, it's not going to kill you. Chances are, if you didn't need it before, you don't need it now, especially when you're looking. You want everything to look pristine, or at least as close to pristine as you can, for when the underwriters are going through, they don't find a little flag saying, hey, where did this account come from that wasn't on your original report, right? Because that throws a whole bunch of bells and whistles for them that can make them walk away, and then you're kind of stuck. You have nowhere to go and then you lose the home. I've had it happen. It does happen, and it's just one of them things that if you can avoid doing it, I would. I understand sometimes there's an emergency, things happen. Your car just blew up. I don't know. Your engine fell out, and you just had a really nasty car repair. If you can justify the expense, for your ability to be, like, if it's something that requires you to go back so you can go to work, like you need your vehicle to get to work or something, and you can justify the expense, most of the time they'll be okay with that kind of stuff. But buying a boat for the sake that you wanted to have a boat when you're trying to buy a house, they wouldn't call that a necessary expense. They'd call that a luxury expense, and that's stretching your debt to income out. And if it's over a certain percentage, they won't even check it. They won't even touch you. At least not as traditional lender or mortgage broker will. So you want to try and keep those things in line so that it meets their criteria, that you can get through the process. Once you're closed and the deal's done, you start making those mortgage payments. You want to give it a few months after you close, and then you can start looking at buying all the fancy toys and things with credit and what have you, if you really need to go down that road because you just don't have the extra cash with, and you just put it all on a down payment. So I hope you find that information helpful, and I hope this makes the buying process a little less confusing to you. And then it's something you can use in the near future. So like, comment, subscribe. Let me know if you have any questions or you need something else explained down in the comments, and I will respond to you. I do that personally. Or you can check out any of my social media sites. So I hope you find that information helpful. Once again, and we'll talk again soon. Have a great day.